Robert Kiyosaki, Rich Dad's Guide to Investing, What the Rich Invest in That the Poor and Middle Class Do Not. Welcome to the summary of Rich Dad's Guide to Investing, What the Rich Invest in That the Poor and Middle Class Do Not. By Robert Kiyosaki. This book explores why a mere 10% of the population owns 90% of the wealth, and how you can join them. Discover how different investment types, financial literacy, and the legal restrictions on certain investments affect wealth accumulation. By casting out traditional middle-class advice, you'll learn to shift perspectives and strategies, build a business, develop your financial knowledge, and ultimately become an insider who can invest like the rich.
The 90-10 Rule of Wealth. The 90-10 rule applies to money, where 10% own 90% of the wealth. This rule also holds in the entertainment industry and investments. However, the rich have access to investment opportunities that are off-limits for the poor. The Securities and Exchange Commission restricts certain investments to accredited investors only. These rules hinder poorer people from making the best investments of the rich. Rethinking financial security. The typical middle-class approach of working hard, saving, and getting an education won't make you rich. Instead, the wealthy invest in businesses and assets using their pre-tax earnings. This allows them to have more money to invest, leading to higher chances of wealth generation and less risk. Employees, on the other hand, have less money to invest and face higher risk in employment-based financial security. Investment 101. Many people shy away from investing because they do not understand financial terms, but developing financial literacy is key to financial success. Rich individuals never confuse assets and liabilities. Understanding the difference between the two is key to making better financial decisions. An asset only generates cash flow while a liability takes money out. Being able to identify this difference is the first step in developing financial literacy. Knowing financial terminology such as debt-to-equity ratio, return on equity, cash-on-cash return, and financial leverage are essential tools to successfully investing. Without understanding these concepts, investing can seem too risky. Therefore, developing financial education is a smart choice in the quest for financial success. Understanding the taxonomy of investors. Investors come from all walks of life. This book delves into the two main types of investors, accredited and qualified. Both of these investors are outsiders who have little control over their assets despite their wealth. In contrast, an inside investor is someone who creates assets instead of buying them by building their own businesses. These businesses can become valuable assets that generate income or can be sold. The goal is to become a sophisticated investor who knows how to make tax and the law work to their advantage. To become an insider, one must build their own business and use the experience to analyze other companies from the outside. This informative book provides valuable insights into the world of investing. Anyone can be a businessperson. Starting a business doesn't require wealth or a lot of time. The author's personal experience and examples of successful business leaders prove that anyone can become rich with just a good idea and creativity. Many people believe that they couldn't possibly start their own business, but 120 years ago, the majority of Americans were small business owners or farmers. The author challenges this belief and argues that anyone can become a businessperson and achieve success. One reason why people are hesitant to start a business is due to the perception that it requires a lot of time and money. However, it is possible to start a business part-time while working a day job. Michael Dell and Jeff Bezos are examples of people who started successful businesses while working part-time, eventually becoming billionaires. Starting a business doesn't require significant wealth either. In fact, the author started his first successful business as a child by taking discarded comic books and starting a comic library. He emphasizes that all it takes is a good idea and creativity to build an asset. Once a business is established, it provides options such as reinvesting profits into other assets, growing the business and selling it, or taking it public. These are opportunities that are not available to employees, and can lead to immense wealth. The main takeaway is that anyone has the potential to start a business and become a successful businessperson. It doesn't require wealth or a lot of time, just a good idea and a bit of creativity. In the next part, the author explores the key principles of making a business work. Mastering the art of building a business. Building a successful business is more than just having a great product, it involves having a spiritual mission, a great team, and strong leadership. These are the three things that every business owner or investor needs to master in order to succeed. The author of this book reveals that a guiding spiritual mission is crucial in building a successful business. A mission that goes beyond just making money and aligns with the financial goals of the business will ensure that the business stays on track toward success. Henry Ford's mission to democratize the automobile led to his immense financial success. Additionally, the importance of a great team cannot be overlooked. Leaders should invest in a team that has diverse skills and knowledge. This investment will pay off in the long run, as a skilled team is more likely to bring financial success to the business. Finally, leadership skills are crucial to building a thriving business. Leaders should focus on bringing out the best in their team members, and aspiring leaders can develop their leadership skills by volunteering in groups and organizations. Overall, the book emphasizes that mastering the art of building a business requires more than just capital and a great product. It requires a spiritual mission, a great team, and strong leadership. The art of communication. In business, good communication skills are essential for success. Sales training programs can help improve these skills by teaching the ability to communicate the value of a product with ease and fearlessness in the face of rejection. Physical appearance is just as important as words, with studies showing that 55% of public speakers' impact comes from body language. Improving communication skills and appearance is an investment worth making. Maximize your returns as a sophisticated investor. Learn how to take control over your investments by becoming a sophisticated investor, spreading the risk, and minimizing tax liability for greater financial returns. Congratulations on starting a successful business. Now, it's time to take things to the next level and become a sophisticated investor. By doing so, you'll gain more control over management, corporate structure, investment decision-making, and taxes. The result? Maximized returns. Let's take the example of Bill and Jane, who own a restaurant as a sole proprietorship. As a sophisticated investor, you would recommend having two corporations, with Bill owning the restaurant and Jane owning the building. This way, risk is spread, and if anything goes wrong, like a lawsuit, the real estate is legally separate and protected. Moreover, under this corporate structure, expenses like health insurance and legal fees are allocated as business expenses and paid pre-tax, with taxes being paid at lower, corporate rates. This approach results in less risk, less tax, and more financial returns. Becoming a sophisticated investor means investing in real estate, stocks, shares, and a business venture. With experience gained through building a successful business and investing in financial literacy and education, you can make investment decisions like the rich, spotting the best opportunities and understanding what's really risky and what isn't. In conclusion, don't settle for an average approach to investing, which only lets you work for your money. Instead, become a sophisticated investor, spread the risk, and let your money work for you.
In this summary, we've examined the invaluable lessons from Rich Dad's Guide to Investing. In order to bridge the wealth gap, it's crucial to understand the investments of the rich and change your mindset. Embrace financial knowledge, strengthening your understanding of assets, liabilities, and financial terminology. Prefer investing and business ownership over traditional employment to gain significantly better opportunities for wealth generation. Develop your communication and leadership skills, which are essential for business success. Finally, by becoming an inside investor and ultimately a sophisticated investor, you can learn to transform your financial standing and unlock opportunities available to the top 10% of the population.